Alongside Miranda Kahn, J.D. Hayworth back with you on America's Forum with news of the Fed. The Federal Reserve expected to lay the groundwork today for the first interest rate hike in nearly a decade.
The central bank is expected to toss out a pledge to remain patient before hiking interest rates.
This is news of great interest. Joining us now to talk about it, Peter Schiff, the CEO of Euro Pacific Capital. He joins us via Skype from Connecticut, and hanging in from Newsmax New York, our friend Betsy McCoy. So the word patient apparently is being eliminated from the Fed's lexicon, Peter. Your take on what might happen?
Well, nothing is going to happen in reality. The markets might react to this, but this is simply the Fed staying on script. They're trying to pretend that they have the intention to raise interest rates, and so they want to continue the pretense that we're moving towards that direction. But I think the next move by the Fed is more likely to be launching another round of quantitative easing, QE4, rather than any kind of rate hike.
And how would that affect us?
Well, it's going to affect us the same way the last several rounds did. It's going to further screw up the economy. You know, the U.S. economy is in much worse shape today than it was 5-6 years ago when the Fed, brought us down this path. Unfortunately, they can't get out of this monetary policy without precipitating a crisis. And maybe the Fed knows that, maybe they don't. But we're going to learn this lesson, unfortunately, the hard way.
Well, let's talk politics, Peter. Obviously, the Obama administration has a big incentive to pressure the Fed because as long as interest rates are minuscule, almost non-existent, we can't really cope with the full consequences of this mounting debt. The CBO says when interest rates go up, it will be unsustainable. So what is the pressure from the White House, if any, on the Fed not to raise rates?
Well, I think there will be pressure coming from all fronts. The White House, the Wall Street, housing industry, everybody is addicted to cheap money. Everybody is dependent on it. But unfortunately, we've made lots of economic mistakes. There are major misallocations of resources that have been brought about by the Fed's artificial suppression of interest rates. Now, when the Fed stops doing that, all the problems rise to the surface, and we realize, what a mess we're in. But the Fed doesn't want anybody sobering up. They don't want anybody understanding how bad the problems are. So that's why they're going to do more quantitative easing. But eventually, the bottom will drop out of the dollar. The dollar's been rallying recently based on the belief that the Fed's going to tighten and that the U.S. economy is sound. When people realize that they've bet wrong, that the Fed is going to ease, not tighten, the dollar will really drop. And I think when the dollar's decline turns into a rout, the Fed's going to be backed into a corner, and they're going to be reluctantly forced to raise interest rates. And by that time, all hell's going to break loose when they have to do that.
Well, as investors try to seek a safe harbor while all hell breaks loose, Peter, we think about precious metals. Been a lot of talk about silver lately and going to silver in terms of investment. Your take on that?
Well, not many people have been turning to the precious metals. That's why silver prices and gold prices are off so much. People have put their faith and their trust in the Fed and the dollar. And I think, they're going to be very disappointed by what happens. And I think a lot of people that should have been buying precious metals have been buying dollars and treasuries instead. And when they realize their mistake, it's going to be a rush for the exits when it comes to the dollar and the treasury market and a rush to accumulate gold and silver. There's not that much around, so go a lot higher when investors finally put two and two together.
Well, Peter, let's go back to the spendaholics in Congress for a minute, because there's a lot of pressure now to raise the debt ceiling and borrow, borrow, borrow more. Connect the dots for our viewers between this mounting debt and the interest rates.
You got 45 seconds to do that, Peter.
Yeah, the only way that we can service the debt is at ridiculously low interest rates. I mean, we're just as broke as Greece, and we're no more able to repay our borrowed money than they are, but we can pretend we're solvent so long as the Fed is monetizing debt and interest rates are at zero. But it's when interest rates start to rise that everybody will realize that we're broke.
You got that done in less than 45 seconds. A scary thought that we're like Greece, and that's G-R-E-E-C-E, the country, not Grease, the motion picture or the musical around the corner there on Broadway from Newsmax, New York. Peter, you make inherent sense, and we'll have to watch out for our perhaps devalued dollar if this quantitative easing continues. Sir, our thanks to you, and Betsy, our thanks to you as well. And America's Forum will continue right after this timeout on Newsmax TV.